Welcome to Module 4, Trade Like the Professionals and Using Risk Reward Differently. This module is going to be the big one. This is where you are going to turn your trading career around from an unprofitable trader to a profitable trader, hopefully. If you've been in my Telegram group or seen any of the results that I publish on the website, you probably already know I trade a little differently. So what I want to do is start by explaining risk reward and why I focus on it in the basic teaching on the website and on YouTube. So the way that I show to take a trade is by having a fixed stop loss and a fixed take profit, which gives you a set risk reward ratio. Okay, entering a trade with a set stop loss and a profit target is how we're all taught trading needs to be done. Okay, you know you can make money doing this. I've got a spreadsheet on the website. If you haven't already seen it, go and check it out, the risk reward spreadsheet, and it shows you basically how you can make money by having a positive risk reward ratio and a good strike rate. So most systems, you only need a 2-to-1 risk reward ratio and a 50% strike rate to make money. Okay, and that the maths is sound. Okay, but the problem is people don't implement that correctly, and this is where everybody falls down and everybody fails when they're trading. I used fixed risk reward for a long time and I made money with it. It was great, but the problem with it is it has a massive psychological strain on you because you will hit losing runs, and losing runs will give you zero confidence in the strategy or the indicator that you're using. Okay, so in an ideal world, this is how I would trade and how I would suggest every trader trades, because it's mathematically sound and it's financially viable to execute your trades in that manner. Okay, but there's problems with traditional risk reward and stop losses. Okay, and the issue is, as I explained in module 2, the banks are powered by stop losses, so they need to come and take out stops in the market to build their order books in order to move the market in the direction that they want. Okay, so we're programmed as retail traders to put a stop loss in the market. The bank's job is to take out our stop loss. There's a disparity there. It doesn't add up as retail traders. Our job, basically, as far as they're concerned, is to put money in the market so they can take it and run off with it. Okay. Also, we're not all the same psychologically. We can't all trade in the same way. Everybody's got a different risk appetite, if you like. So when I enter into the market, I want to make sure that I'm risking a certain amount. I've got a plan and I know where market's going to go, and if it doesn't go there, it's going to do something else, and I'm going to get in and do this. I have a plan when I get in. A lot of other people will just want to get in the market, put a stop loss in with 1% and off they go, and that's fine. Some people, when their stop loss gets hit, will go full tilt and double their risk and lose their accounts. Others will be able to handle a losing run of 4 or 5 trades. So we're not all the same. Okay, not everyone can trade in the same way. So what I'm going to show you in this video is an alternative way to trade, which I want you to try. Okay, we're going to dump the stop loss for a while. Okay, and we're going to trade small. We're going to trade with a very small lot size, but we're going to win 80% plus of our trades. All right. So just for a while, to see if you like being a profitable, winning trader rather than being stopped out all the time, I want you to try this. Okay. All right. It sounds really abnormal, but bear with me. Try and trade this way. I'm going to show you in this video the concept and why I do it and the maths behind it. And I just want you to try it and see if this is the thing that turns your trading around, because it turned my trading around from being a break-even, slightly profitable trader into doing massive 10 to 20% a month, continuous months. Okay, so let's look at why you're currently not a successful trader. All right, regardless of the system or the indicator that you're using and looking at, whether you want to trade order block breakers, whether you want to trade moving averages, stochastics, whatever the system or the strategy or indicator is that you're looking to trade, the problem is not going to be with that system or indicator. The problem is us as human beings, we need instant gratification and we need to profit now. We can't wait. So when you start trading, if you've been trading for a couple of months, you've seen all the guys with the Lambos and the big houses, and you want that. You need to make money now. And when it doesn't happen, you get cross, okay? So when we lose, i.e. we get stopped out, we get angry or sad. It produces an emotional response when we don't get it right. Okay, we're human beings, we're emotional, and we can't unprogram that. All right, it's not something you can easily get over. There's books on psychology out there. There's courses on psychology. There's some fantastic material out there on psychology, and it tries to teach you how to reprogram yourself. The way that I trade, and I've tried that, but the way that I trade basically removes psychology from the entire trading process, which means you don't have to worry about that bit. And that's the bit that makes 95% of traders fail. All right. So you've probably heard about psychology and emotions playing a big part in trading, and that is absolutely true. But as I said, it's not something we can easily overcome or find a way around. So don't bother going out and trying to find courses on psychology. Okay, it's very important. I admit it's very important. But I don't want you to try and beat it. I want you to change the way that you trade so that it becomes a lot less important in your trading and in your strategy. Okay, we're going to change the way we trade to take the emotion out of it. So basically, we need to find a way as traders of getting instant gratification. All right. So I've told you that, as human beings, when we see an account like I show you P&Ls of mine in the Telegram group and things all the time, successful trades, instantly you want it. Okay, you want it now. You don't want to go through 10 years of trading like I did, learning things to get to that point. You want it now, instant gratification. We're built and programmed to do that. And that basically is what I'm going to teach you, all right? So let's have a look at the common things that happen when you take a trade, all right? These are your problems you have as traders right now. So we're going to go through these one by one, all right? And see if you can identify with one or all of these. I identify with all of them. Some of you may identify with a few of them. But it depends on the strategy you've been trading and how you've been trading. So let's have a look at the first one. You take a trade and it hits your stop. It turns around after it's taken you out and goes your way. Okay? You take another trade and it hits your profit, which is fantastic. You've got a profitable trade. But then it carries on further and goes 5 times higher in the direction that you were trading. The third trade you take, it goes into profit. You move your stop loss to break even. Everybody does this, okay? And you get stopped out, right? Fourth trade you take, it goes into profit and it's doing really well. It's 3/4 of the way to your profit target and it puts in a massive bearish engulfing candle. And you think, oh my God, I'm going to take what I've got, and you get out, which is good. You've made a profit, all right? You use a new system, okay? You find order block breaker strategy, or you find another system or indicator out there and you think, wow, that looks amazing. This guy makes it look really easy. You start using it, you get an instant run of 5 or 6 losses and you just give up with it, okay? How many of those 5 things have happened to you as a trader? I'd imagine 99% of you now are saying all of them, all right? It's happened to me. It's happened to everybody I know pretty much. So this is typically what happens to us every time we get into a trade. The thing is, you think there are 3 bad things and 2 good things, right? Okay, because we've got one that's hit your stop loss, one that's made you a profit, one that you got stopped out on, one you got out with a profit, and one you've had a run of losses. So that makes sense. There's 3 good things and 2 bad things there, but that's wrong, okay? Every one of the outcomes above is negative because it makes you feel angry, sad, or unhappy, all right? It gives you a negative emotional response. We concentrate on profit, and we're trained and mentally geared up to want profit. And there's nothing wrong with that, okay? That's why we're doing this, why we want to become traders, because we want to make money doing this. We want the ideal life where we check our charts 2 or 3 times a day, put on a few trades, come back the next day, see how much profit we've made, analyze the market, and rinse and repeat, right? Okay? That's the ideal trader, all right? Unfortunately, that's not always the case, but hey, there are some people that do that. There's nothing wrong with that, okay? But in trading, when you get these angry, sad, and unhappy moments, it makes you go full tilt. Your psychology gets affected. All right. The whole industry is geared up to make you unhappy and angry, but you don't know that until you actually start trading. And because it's such an exciting industry, you become addicted to it. And this makes the cycle worse and worse and worse, and it kind of snowballs. So even if you get a profitable trade or run of trades, you're still usually chasing the losses that you've already lost. Okay? So it's this cycle of trying to get back to break even and losing a bit, getting back to break even and losing a bit. All right? And that's what most traders tend to be trapped in. Okay? I've been there, I've done that, and I know a lot of people that are in there at the moment. All right? So looking at the common traits in these statements, okay, and I've enlarged them so we can see them easier. Okay? You take a trade and it hits your stop. Okay? Turns around and goes the other way. You take a trade, it hits your profit and carries on in your direction. You take a trade, it goes into profit, you move to break even and you get stopped out. You take a trade, it goes into profit, puts in a candle that scares you, you get out. You use a new system, get a run of losses and give up with it. By that I mean you get stopped out. Okay? 4 out of 5 of these statements are to do with getting out of the market. 3 of them are to do with automated stops, line in the sand stops. The other one is a manual stop. Okay, do you see the problem? How many times is the word stop written on that page? So the problem is you are getting stopped out, which you'll say is absolutely fine. I've got to have a stop. Yes, you have got to have a stop, all right? But we need to find a way to get profit consistently without getting stopped out. This is our goal as a trader, okay? Remember what I said, we need profit now, okay? We need it now. We're programmed to want it now. So we've got to get that instant gratification. We've got to put something in our P&L every day, okay? And our goal as a trader is to be consistently profitable, okay? The way to do that is we don't use fixed stops. Okay, this is how the institutions, the funds, and profitable traders make their money. All right, we will have a stop, but not in the traditional way that you currently use a stop. A line in the sand underneath a high or a low when you've got into the market. That traditional stop, we need to stop using it. Okay. Now, before you run off, okay, and think, this guy doesn't trade with a stop loss. This is absolutely useless. I want my money back. Okay. I trade in this way and I make profit consistently. And as I said, I do use a stop. I've got a stop. It just isn't a line in the sand that you're used to. So let's have a look at the facts, okay? If you've been in my Telegram group or you have found me on Facebook, seen my Facebook posts, or looked at the results on the website, you will have seen me posting P&Ls. Mainly I do this in the Telegram group just to G up the guys that are in the Telegram group and show them actually this can be done, okay? So, you know, I've got lots of screenshots here of you know, I make losses, don't get me wrong, I do use stops, I do have unprofitable trades and make losses, but basically on a daily basis you can see I am bagging money every single day, okay? I've got a percentage gain on my account every single day, apart from these. Okay, I do have occasional losses, as I said. Here's some of the trades I've taken. Okay, you see how many profitable trades I have. There's a few losses in there. Okay, it's £1,000 week. These are usually screenshots of a week, so I do a recap every Friday of what's happened in the week. Got some TPs being hit, got some stop losses being hit. Okay, there's my lot sizing. Okay, so everything's transparent, everything's out there. Okay, I don't hide anything. This is a screenshot of my Forex Factory Trade Explorer. I don't know when this is from, but basically what I do is I have a multiple brokerage accounts. I keep a small amount in a brokerage account, which I then empty out regularly when it's got lots of profit in it. So you'll see that the deposits are always a bit of a funny number, and they're always, you know, fairly low, and then nice lots of profit. I reset my Trade Explorers every time I do a withdrawal. So this is a 25-day trading account. This one's been going for 5 weeks. We've got 133 trades, no open trades, so everything's been closed. There's no massive drawdown sitting there. I'm not bagging tons and tons of pips and actually hiding 25 grand's worth of losses under them. A lot of EAs do that, by the way. Be very wary of any EAs you see with a nice big steep profit curve. Nah, normally something going on there. I've got 85% win rate, positive risk reward ratio. Okay, so everything I teach you in the online free courses and on YouTube, I'm doing it all, but I'm just doing it in a different way. All right. So it's important that you understand this. There is a different way to trade, and that is the thing that I think 95% of people are missing, and that's why you're not profitable. Okay, and that's why I've got this video. All right. So let's have a look at how this is done. You have got more chance of being right than you have of being wrong if you use a strategy that is based on probability and edge. In my YouTube videos in the free course, I go on about probability, edge, statistics, and all that sort of stuff a lot because I'm a logical guy, I'm a programmer, and I work with facts. Okay, I don't work with squiggly lines and anything that can predict the future because it can't be done. I only know what's happened in the market, and I know that the market repeats itself. So I use that information to give myself additional probability of being right and give myself an edge in the market. Okay. The reason you've got more chance of being right than you have of being wrong is simply due to the way the market moves. Let me just get my drawing tools up. Okay, so we know the market moves in cycles. Yeah, it moves in waves. Right, very crude drawing of a buy cycle and a sell cycle there. All right, but the market moves in waves. It chops up and down and up and down, and it goes all over the place. It goes where it wants to do, and you put in some big moves sometimes, and it will consolidate, and that's basically what the market does. All right, the way that I trade takes advantage of those waves. Okay, the way that you trade doesn't. Because what happens is you put stops in the market and the market comes down and takes out those stops. You put another one and it comes down and takes out that stop, all right? That's basically what I'm doing. I'm just taking advantage of these waves and these moves. What goes up must come down, okay? Look at any chart. It always goes up and it always comes down. The market is an efficient beast. It needs to make sure that certain areas have been covered before it decides to go in other directions, and that's all we're doing as traders, is taking advantage of those moves. We don't know where the moves are going to go. We're getting on the train's pulling out the station, it's going to go up or down. We don't know, we're on it. We just need to make sure that while we're on it, we find a way to make money. Okay. The thing that stops you being right, as I said, when you take a trade, is your stop. Okay. When you get stopped out, you're wrong. Okay. But like I showed you in the previous slide, how many times has it come taking your stop out and then gone off in your direction? So you were actually right. You put your stop, got taken out, which made you wrong. Okay. So let me prove this to you with some screenshots. Okay. You've seen these on the website probably. If you haven't, then this is basically a template I use to show my trades. Okay. Just show trades that I've taken. So every time I get into a trade, and this is very important, you might want to note this bit down. Every time I get into a trade, my number one goal and my expectation of that trade is that I will set a take profit and it will hit that take profit. Okay, so this is what I want to happen. I want to get in with a sell, have a little bit of drawdown, that's all right, and then it go and hit my TP. Okay. That's what I want to happen. Not a lovely trade there. Get into a trade and I want to go and hit my TP. All right. Let's just have a quick look at this as an example. If you got in there on a signal, whatever that signal may be, on a lower time frame. These aren't the time frames I trade. These are just H1 charts to show the trades. I probably would have taken this one on an M15 or an M5. But so there's my entry. Okay. Traditionally, what would I have done? Place to stop here. Would I hit that target? No. I'd get taken out. But then it would have hit my target. How does that make me feel? Happy or sad? Sad, obviously. Okay. Sometimes it takes one entry, as I said. Sometimes my first entry is wrong, but the second entry that I take is right. All right. In this case, both of them were right. Like this one. Okay. Look how wrong I was there with my entry. Got it completely wrong. Did I make money? Yeah. I even got in again because I was pretty sure it was going up, but I wasn't quite sure exactly when. All right. Sometimes I'm really wrong and I need to get in 3 times. Okay. And that's absolutely fine. I know it's going up at some point soon because I know market structure. I know order block breaker theory. Okay. I know my RSI usually when it gets down here means at some point it's going to go up. And I've probably had some other signals and confluences along the way that tell me that at some point this price is going to go up. Look what I've got here. A massive propulsion candle. What does it normally do when it puts one of these in? It has to come up and fill that gap. Look at where my TP is. Look at where it came to. I knew it was coming back here. I just didn't know when. I thought it was going to come back straight away down here, but I was wrong. So I thought, well, when it gets down here, I think it'll probably come in again because there was probably something over here that told me this is a possible turning point. And it did turn there. But then it came back down and took out the stops again. Then it went up and it came back down and it took out the stops again. So I got in down here because I thought, well, if it's taken it out once and it's taken it out twice, I'll get in again. And look what happened. Okay. So sometimes I need to get in 3 times because I'm wrong. Right? And occasionally I'm just plain wrong and I need loads of entries. All right? But that's fine because I know which direction the market is going to go at some point in the future. Whether it comes up and gets me out of every position with a profit, I don't know. Some of these I might have to take a loss on. You saw on my P&L, I take losses. Okay, I don't get it right every single time. These 2 trades here, break even. I didn't make any money on them. But was I right? Yeah, I was totally right. Occasionally, I'm wrong for days. Okay, I get in and I'm wrong. I'm just really, really wrong. Okay, and I have to hold my trades for a while. These were trades where I wanted to get in and get out. Okay, but if I'm wrong and I can't get out, what could I do? Take a loss? Yeah, could take a loss. Or if it's not going too far against me and I'm comfortable with the trade, maybe I just hold it because I know the market does what? It goes up and it comes down. So it's highly likely at some point I'll be right on that trade. I just don't know when. All right? Is this making sense? Hopefully this is making sense. I'm going to talk about the sizing because obviously that's massively important. If you took 1% or 2% of your account on every one of these trades, you'd be on a margin call in no time. All right? So we're not going to do that. But I want to show you the theory and see how the market moves, and when I'm wrong, I'm eventually right. All right? So sometimes I have to hold, and basically all I'm doing in these situations is I'm taking a short and I'm getting in, expecting to get out, and I don't. So what do? I turn it into a swing trade. Multi-day hold. Multi-week hold if I need to. But as long as that trade doesn't come back too far and make me uncomfortable as a trader, I'll hold on to it. Okay? And that's what I'm going to show you how to do. This is the difference between a successful trader, in my opinion, and an unsuccessful trader. Okay, so but every wrong entry I make is calculated to be wrong when I get in. All right, so I don't just get in with 1% and go, oh, it's gone against me. I've got a plan. And that's what we're going to cover in the next module, is the details of that plan. But that plan basically means that I know if price goes against me, I have got set entry points where if I'm wrong, I'm likely to be right in the future, right? And that's a key to this strategy. So in the next module, I'm going to show you how I calculate my entries. But the key to trading profitably for me, and hopefully for you too, is to scale in small and be right many times and often, right? Just be right with lots of trades, small trades, but be right a lot. Whatever you want to risk on a trade normally, you need to scale right back, okay? At the moment, you as a trader are not profitable, which is why you're watching this course. Okay, that's why you're here, because you're not profitable and you want to find out how to be profitable. One of the reasons you're not profitable is because you're getting stopped out all the time and you're emotionally attached to that trade. Okay, so you need to decide if you want to be right 80% of the time or 85% of the time or whatever it is. Okay, be a trader that gets it right 85% of the time, or if you want to be a trader that gets stopped out over 50% of the time, like you do at the moment. That's a simple decision you've got to make. Okay, this may not be for you, all right, and that's absolutely fine. It's not for everybody. Trading with stops is not for most people, which is why 95% of the people that get into trading fail. But maybe they haven't found this way of trading. All right. So if you do want to be one of those traders that's right 85% of the time, okay, then do module 5 and module 6, because in my opinion, as it has with me, these are going to change your life. All right. This is going to change the way that you trade forever. If not, and you want to stick to standard stops, take profits, risk reward, you can skip to module 7. Right? Module 7 has got all of my entry strategies in. Okay, the strategy that I use to get into the market is no different. You can use it with a fixed stop loss and a fixed take profit. Absolutely fine. But it's just another system, and you've probably tried lots of systems before. Personally, I think this is one of the best systems out there, but that's me being biased, obviously. But hey, if you want to trade that way, that's absolutely fine. But I'd encourage you to give this a go, because for most of the people that I have shown this to, they have found this is the magic bullet. This is the holy grail. All right, the holy grail is you understanding how to extract money from the market, not an indicator or a system. Okay, so before you decide whether you want to do this or whether you want to go with the fixed stops, let's do this for real. Okay, I'm going to take some trades now in a simulator based just off the RSI indicator. All right, so basically this is just gambling. Okay, there's no way I can be 100% right because I've got no historical levels in the simulator to look back at. I've got no market structure there in the past to help me decide whether to get on an entry. I can't scroll back or zoom out and have a look for levels. I can't do any of the stuff that I've taught so far in this course. All right, so it's just a lucky shot, really. All right, so let's see how we get on in the simulator. Okay, so we'll go into the strategy tester. Okay, and I use a EA called Sphere Tester. You may or may not have heard of this, but it's a fantastic bit of kit. I'm just going to quickly show you their website. Basically what Sphere Tester is an EA you can use in the strategy tester to actually take trades and kind of trade live in high speed. So it's a proper trading simulator where you can see your orders, adjust your orders. You'll see it in action in a second, but it's something that basically allows you to practice trading properly. Okay, not just watching the market move. You can get in and out of the market and see what would have happened with your trades. All right, so go and have a look at the website. It's $49, but in my opinion, it's the best investment you will ever make in your trading career. The ability to actually practice trading properly for $49 is absolutely priceless. All right, and you'll see this thing in action. You're going to want it. I'll try and put a link somewhere on the course page. But yeah, I mean this is a great bit of kit. So let's have a look at it in action. What I'm going to do is I'll just leave it on Euro US dollar H1. That'll do. What I'm going to do is, let me just start this. I'm going to take some trades. I'm going to set a target, a profit target of half of the ADR. So Euro US dollar at the moment is 96. So I'm going to set my TP, let's just say 50 for round number and ease sake. This is a £10,000 £10,000 account. All right. So when you see drawdown going on here in Sphere Tester, that will be as a percentage of a £10,000 account. So I'm going to use 0.1 lot sizing, which is probably a little bit big maybe for it, but I'll just leave it there for simplicity's sake. Get rid of the stop loss, We're going to set 50 TP. Okay, let's open the order screen. All right, so we're going to get into the market. That's a good start. So let's just buy there because we're under the 32 level on the RSI. So you can see what's happened here in Sphere Tester. I've got speed control up here, so I can speed it up and slow it down. You can click this button to see your orders, and this will show you all of your orders, the profit for that order, the total profit or drawdown. You can adjust stop loss, TP, modify it, put it at break even, close your trades, do everything. So basically it's a full-blown trading simulator. You can do everything. You can even have news. It's got historical news, so you can see when news events happen, but I don't care about news. Okay, so all I'm going to do is I'm going to show you basically what happens when you trade without a stop loss. And this is tiny 0.10 lots, okay, on a £10,000 account. So 1% drawdown or 1% trade would be £100. 2% would be £200, obviously. So if my drawdown goes into £100, I'm basically 1% of my account is in drawdown, all right? So just bear that in mind while you're watching the simulator. We're happy to risk 1%. Okay, I risk a little bit more. I risk up to 3% on my trades, but that will all become clear when we go through the rest of the modules. So let's just, for now, get trading with the Sphere Tester. Okay, so I've taken that long there. Price has come down. It's taken out these stops, which is good, which means we're probably going to get a push up. Another big, so it's taken out the stops again there. Okay, we're off and running, and let's see how it plays out. Hopefully that's going to get up to our TP before it gets up to the 68 level, because I want to take some shorts up there. Toying with us. There we go, TP1. All right, so there's my first trade. Wasn't uncomfortable. I don't know what I went into drawdown, probably went into £25 a drawdown. We just got over there, let's sell. Slow this down a little bit. So yeah, so as I came down here, I didn't see what the figure was, but I probably went into something like 25, 30, £40 drawdown. I don't know, but you know, 0.5% maybe of my account in drawdown, which is fine. So I've taken a short here because we've got over the 68 level on this RSI. So decided to take a short because I'm going to take shorts when we're in this sell zone. I'm going to take buys down here. Let's speed this up. Still going up higher. Okay, even higher. Might get ready to take another one up here because here we go. We've gone over the 68. I'm just going to take another trade up there because we went over the 68 level again. Still going higher. Could take another trade there. Probably a bit late to get in now. Look at that lovely shooting star. Let's take another one up here because we're above this. We're on the 68 level again. So I'm going to take another entry. Now look at my drawdown. I've got two wrong trades, okay, in the market, and one that I've just got into. All right. So if you'd have taken these trades on the RSI, bear in mind we're not going to. This isn't the strategy. The RSI, I'm just demonstrating a really simple way to get in and out using the RSI. But if this was your strategy of selling over 68 and buying under 32 on the RSI, you would have got into this trade here, okay, and been stopped out. So you've lost, I don't know, whatever your risk is. This trade here, you'd have got into, you'd have got stopped out. This trade here, you'd have got into, you'd have got stopped out. This trade, we're still in, our stop would be up there, wouldn't it? So that's where we would have put our stop. So let's see how this trade would have panned out. You're okay at the moment. You probably would be okay, you'd survive that. Well, you've just been stopped out again. Okay, so you've got 3 trades in now and 3 stop outs. Now look at my drawdown. 1.5%. I'm in 1.5% drawdown at the moment on my account, coming up for 2% drawdown. All right, I'm still comfortable. 2% drawdown. Look at where price is. Look at where price is above the 68 level. And look at what it's doing, moving up. What happens in the market? What have I told you about buy cycles? What tends to happen when we get up here a lot of the time? Do you think I'm worried? Okay, I've got nearly 2% of my account in drawdown. All right, I'm risking 2% of my account on this trade, and all the signals are saying to me, so there's only one in this case, but there's a good chance price is going to come down. So do you think I'm worried about this? No, I'm fairly comfortable still. So I'm going to stay in the trade. Price is continuing to move up. Okay, we just had a lovely bearish engulfing candle put in there. We're sitting in the order block being supported at the moment. So if this order block holds, we're probably going to push higher. Now we've got a breaker. Okay, so this is possibly, what's this possibly going to be? This is possibly going to be our peak formation high, isn't it? Okay, we don't know that yet because at the moment it's just a higher high. All right, but there's a good possibility that that's what that could be. Let's let the trade play out. Just toying around at the moment. There's a good chance it could come back up and retest this area as well, don't forget, because quite often price comes up, retests before it drops. Let's see what happens. Okay, we're dropping down nicely now. Maybe we're not going to do a retest, maybe we're just going to drop now. There we go. Now look at where my drawdown is, all right? I'm back to profit. So I've got 2 trades which are wrong, 1 trade which is right, but I'm at break even. How good is that? Let's carry on and see what happens. Ooh, big retest there of the breaker and the peak formation candle. What is that? What's happened here? Okay, saw this, got in short. Maybe I put my stop up here. Came up, dropped down. Where would I put my stop? Definitely put my stop here if I'd have gotten a trade around there, wouldn't I? What have they just done? Taken out all these stops at this level. What do you think is going to happen to price now? It's going to tank. It's got to. And, sorry to keep pausing, I've just spotted something down here. Look at this. What's this? Big propulsion candle. What's this? An imbalance. Big propulsion candle. Moved one way. Hasn't come back and traded into this area, has it? So where do we think our target might be? There. Let's leave that on there. Well, it happens to coincide with the TP I've set there, but let's have a look and see what happens. Okay, we're coming down. Hopefully going to get our first TP hit now. There we go. First one in the bag. So we bagged another 50. Continuing to move down. We're not down at this 32 level, so I'm not starting to look for longs yet on my RSI strategy. Let's see what happens. This order block's supporting price nicely. Look, there we go. Pierced through it. Hasn't closed above. Haven't got a breaker. Order block's holding, supporting price down. Everything looks good to me at the moment. A little bit of a consolidation, dropping a little bit. There we go. Bang. TP hit. Okay. Just rub that off the chart. Okay, so what has this done here? Filled this imbalance. Okay. Why was I happy to take trades up here? Because I knew that price was coming back down there. Okay. I'm happy to take trades when I've got a target which is obvious and visible, because I know there's a very, very high probability price is going to come back down to this area. So I'll keep getting short all the time, I believe, because my RSI tells me to in this case, and I've got a target, that there's a short going to happen. All right? That's why I'm getting into the market. Let's let this play out and see where price goes now. We're back down under the 32 level now, so not too sure. We're not quite under the 32, are we? Let's let it play out a little bit more. Now we're under the 32, so I'm not quite sure whether I want to take profit here. Now that was very close. Now, if I was trading live now, I'd be thinking, yeah, it's a bit worrying that, because we're down under the 32 level, so I'll probably just get out. Okay, so I've got out there on that trade. So what have I done here? I've taken 1, 2, 3, 4 trades. Every single one of them has been profitable. I've bagged £200 in profit, 2% on my account. How many days has that taken me? Hours. It's taken me 45 hours, so couple of days. 2 days, £200, 2% on my account, 1 pair. No stop loss, job done. Okay, So can you see why this way of trading is, I think, the best way to do it? All right, because I haven't been stopped out. I haven't got cross. I haven't got angry. I haven't thought my system doesn't work. What I have done is gone into drawdown, but in a comfortable amount of drawdown because my lot sizing is small compared to the size of my account. In fact, that's a little bit big. I don't think I would have gone into 2% drawdown. I probably would have gone into something like 0.5% to 1% with a proper lot sizing. But yeah, so that's basically what's happened. I've made a couple of percent, gone into a couple of percent drawdown. Everybody's happy. I'm happy. Market's happy. Broker's not happy, but I don't care about the broker. And that basically is the concept of how I trade. All right. Should we do some more? Let's do another couple. I'm going to buy it because I'm down here. Let's see what happens. Bought it because the RSI was under 32. Silly reason to buy because that thing could just tank continuously, as I showed you. It doesn't always hold the RSI. It's not a holy grail indicator, but I'm just using it as an example here to show you. My stop would have gone under here. What's happened? Oh, would have got stopped out. Damn. But they put in a hammer. They performed a stop hunt. If I get a breaker here, does that look like a good trade opportunity? Damn right. See what happens. There we go. Might come back and retest it. Might come back and stop hunt it. If it does, I get in again, but I didn't need to. Okay. You would have got stopped out there and lost another £100. I made 50. And I was very, very comfortable. Probably went into £10. I didn't see, but I probably went into £10 drawdown or something. Okay, so that's the idea. That's the concept. All right, played out in real time, just so you can see what happens. Have a quick look at my results. It's a 30,000 account. Sorry. Okay, so yeah, I hardly went into any drawdown at all. But I bagged 230 quid. Right. What's our goal as traders? To make money. Consistently bag profit. What have I done? Made money. Consistently bag profit. What's my strike rate? 100%. That's not, obviously this is only 6 trades over a couple of days, but that's the idea, all right? So that's the concept that I'm talking about here. That's Sphere Tester. Go and get it if you can. It's fantastic and you won't regret it, I promise you. Why was I right? All right. So let's have a look at why this strategy, this entry strategy works. I know statistically the RSI, when it's over 68 or under 32, has a high probability of reversing, and that gave me an edge. Right? It's not a great edge. Okay, like I said, some people can probably live off the RSI, but on its own, it's going to give you an awful lot of false signals, and you'll spend an awful lot of time in drawdown, in big drawdown. Okay, but look at the words I've highlighted here. Statistics, probability, edge. Doesn't matter what indicator I use or what my entry criteria are. The important thing is you have a statistical edge over the market, and that's what we're creating here. The entry method that I'm using to get in without using a stop gives me a further edge in the fact that the market makers, the banks, the institutions can't take me out. So I've got a great system with a great statistical probability of working, which gives me an edge, and I've doubled my edge by making sure that I can't get taken out by the guys because I understand market structure and know how it moves. Okay. At the moment, your problem is you don't know how to take advantage of the moves in the market and the way that it moves over time to make money. Okay. You don't let your edge play out. Why? Because your stop doesn't let the fact that you're right get to its conclusion. Okay, and I've just shown you that happening in real time. You're focusing on being right or wrong, but the market in itself is not a binary system. Okay, it's not yes or no. Right, it's going to go up and it's going to go down, admittedly, but it's going to do that over time. And we don't know when these ups and downs are going to happen, but we do know they are going to happen because we can look left and see it happening over and over again for the last decade, 20 years, however far our charts go back. We can see it happening and playing out. All right. So because you're focusing on being right and wrong and not taking advantage of this, we need to refocus your way of trading into just being right, okay, taking that one trade, hitting that TP and going, brilliant, I got it right, or being temporarily wrong, which is also right, okay. Temporarily wrong is drawdown. We get used to being in drawdown. It's part of trading, and people are scared of drawdown. People see drawdown as, I've taken a trade, I've got a 1% risk on my account and I'm halfway to it in drawdown. That's not drawdown. That's just on the way to doom and being lost and losing your money, all right? So you saw in that little demonstration, I went into drawdown. I was temporarily wrong. I was in too soon, but overall, I was right on the direction because I had a target, that propulsion candle. I had a target to go to, and my RSI indicator told me there's a high probability at some point soon we're going to go down. That's all I did. Very, very, very simple entry strategy. If you'd have done that with a stop loss, you'd have lost. But because I didn't use a stop loss, I won. And I didn't risk a lot of money on it at all. Okay, so I was right because I had the statistical edge based on historical data and probability. Any system you're using now will have that too, all right? So the problem isn't your system, the problem isn't your indicator, the problem is the way that you're trading. So how do we use stop loss properly? How do we use this, okay? We have to concentrate on risk. This is still critical. It's the number one rule is account protection. If you haven't got an account, you can't trade. Number one rule, always protect your money, protect your account, okay? Risking 1, 2 or 3% on your account is absolutely fine in any trade. And I define a trade as a currency, okay? So if I take a long on the pound US dollar and I take a long on the pound yen, I am long the pound. I'm trading the pound. I've got it in two instruments, okay? But I am long the pound. My 3% risk is on the pound, because if the pound decides to tank, my drawdown is going to get faster, quicker, because I'm on two pairs. So look at your risk as being on a currency, okay, not on a trade or on a pair. Okay, that's a very, very important point, and something again that people miss. I see people still doing it now. They'll take a long on the pound yen and they'll take a short on the pound CAD. You can't be long and short on the pound. You can, I mean, in the way that I trade, you can, because it's going to go up and down. You could probably get out of it, but have a bias on a currency, not on a pair. All right, it's an important concept to try and understand. I'll probably try and teach more about that in the live room. But basically, what I'm trying to say is make sure that you have a risk still. You're just risking it on a monetary account, a monetary value based on a currency, all right, rather than on a trade. Okay, so as I say here, you don't have to put it all on one entry. You saw me taking a trade there on the euro US dollar. That short I took 3 positions on that short. I didn't put it all on that first one working or all on that second one working. I just took small positions and spread it out over multiple trades because I was short biased on that pair, on that currency. I thought that that was going to go down, that euro. Okay, so like an institutional trader, I look at risk as a percentage of my account. My stop loss starts to kick in when my drawdown gets to around 10% of my account. Okay, so when you trade in an institution or a hedge fund, you get given an amount of money. All right, you get given, when you start off, like a £1 million account. Here's a million. Go and make some money. Bring us back a positive return on it. Okay, you won't put all of your trades or a single trade on one particular instrument or currency. You will spread that across different things. You might spread a bit across stocks, a bit across Forex, a bit into metals, a bit on gold, maybe a bit on indices. You'll build a portfolio. That portfolio that you have will have some profitable trades in it and some losing trades in it. And it will constantly be having bits of profit and bits of loss happening. But as a whole, you look at it as a portfolio. Okay, that's why it's called a portfolio. It's a group of trades being taken. So you need to start looking at your trades that you take and your drawdown as a whole, right? Don't look at it as I can only risk X%. when I get to 10% drawdown on my account, okay, I've got a 30k account I trade. When my drawdown gets to 3k drawdown, and it does occasionally, that's when I start going, okay, some of these we're very temporarily wrong on. We need to look at doing some damage control, okay, drawdown control, which I'm going to teach you about in another module. But until I get to that 10%, I don't worry. I'm comfortable. I'm not worried about it because I know the market cycles and I know that my edge will make me money. And don't forget, when I've got to this 10% drawdown, I've also been bagging profit every day. Yeah. If I've bagged 20% this month and I get into 10% drawdown, I'm net 10% up. If I shut the whole lot now and go, sod it, I'm going to go off and go on holiday for 2 weeks, I've still made money. Okay. I'm just temporarily wrong a percentage of my account. Right. So try and start looking at your trading account as a whole. Let's do some maths. Right. You have got a £10,000 account. Right. You risk £100 on every trade. 1%. Right. That's what we're taught. You risk 1% on a trade. Okay. If it goes against you, you've only lost 1% of your account. Brilliant. I've only lost 1% of my account. Happens 5 times, I've only lost 5% of my account. Exactly, right? That's how we taught to trade. Let's say, hypothetically, you take 10 trades with a 2-to-1 risk-reward ratio. You're right 4 times out of those 10. Okay, so you've got a 40% strike rate on those 10 trades. Each of those trades that won, you made £200 on. So you made £800 profit. The 6 that you lost £100 on. You lost 1%. So you lost 600. So you've won £200. Okay, well done. You've taken 10 trades, whether that was taken over a week, a month, a day, a year, whatever, doesn't matter. You've taken 10 trades, you've made £200. You made 2%. Well done. You're a profitable trader. Okay. There's a but. There's always a but. Did you let every one of your winners play out to your TP at 2-to-1? Okay. Or did you get out early or at break even with a smaller risk reward? Okay. Remember back to the previous slides I showed you where you get a big bearish candle and it scares you, so you just get out. Okay, I'll get out with a 1-to-1, I'll bag that money. I'll bag 50 quid of the £200 target, but I've bagged 50 quid, I've won. Did you do that? And those 4 winning trades. Okay. Now, did that make you angry when you saw it turn around and fly off in your direction? Probably. So did you really make that £200 with those 4 winning trades? Unlikely. Because with the best one in the world and you setting a 2-to-1 risk reward ratio on your trades, how often do your profitable trades hit TP? And how many times do you get out early? Yeah, answer that honestly. Okay, you probably didn't make that £200. So what you actually had was a 40% strike rate on a really good profitable system, but you might have come out of it break even. Okay, was it worth the stress of taking those 10 trades? Maybe, maybe not. Don't know. Did you even take all 10 of those trades? Were you in front of your computer when those opportunities set up and you got those signals? Right? You might not have even taken them. Did you get a losing run of 6 trades in a row, lost 6% of your account straight away, and actually gave up before those 4 winners hit? Maybe. Don't know. You get my point. With a fixed TP and stop loss and a fixed risk reward ratio, you have to let every trade play out to either a loss or a win, a TP. So you need to take the trade, set the target, the stop loss, shut the chart and never look at it again. Trading with a stop loss is painful. You can lose 6% of your account in 6 trades. Okay, I can go into drawdown by 10% on my account, be temporarily wrong for a few hours, a few days, or even a week, but I will get an 80% plus strike rate or higher, right, and be guaranteed profitable almost every day and not care if I'm right or wrong when I get into that trade. That is a major shift in mindset and the way that you should be looking at trading. Okay, and this is what I need you to try. Okay, so does that sound like a more fun way to trade than the way that you are doing it now? Does it sound more fun to be 80+% profitable, put money in the bank on a daily basis, have a positive P&L at the end of the month, or not? Only you can answer that question. Okay, so the secret to this working, as you can imagine, everybody now watching this video is saying, yeah, but what if it carries on going? Yeah, but what if it carries on going? Yeah, but what if I get in 5 or 6 trades and it carries on going? We've got a plan for that, okay? And I'm going to cover that in Drawdown Control. But the secret is in the planning of your entry, okay? When you get into a trade, what you need to do is plan to be wrong to make you end up being right. Okay, so every trade that I get into, I'm either going to be right straight away and it's going to hit my TP, or I'm going to be temporarily wrong and given another chance to get into the trade at a better level, as I showed you in the simulator. All right. So if I'm only temporarily wrong on trades, why should I stop out on them and take a loss? Doesn't make sense, does it? Because I know that I'm right and I know the way the market moves. Why should I take a loss? Right? The only way I'm going to take a loss is if I get to a level of drawdown that I become personally uncomfortable at. Mine is set at 10%, like I said. Yours might be 5%, might be 3%, might be 25%. I don't know. I don't know what your risk tolerance is. And the only way you're going to know that is if you try this, okay, and you see what your risk tolerance is. I've seen people trading with this strategy and being 50% in drawdown, right? To me, that would scare the life out of me. But they still came out of that and made a profit. They didn't lose. They actually got back to break even and made a profit with a 50% drawdown on their account. Yeah, they had to hold some of those trades for weeks, for months in some of them. But they still came out with a profit because they were managing a portfolio and it was within their set risk parameters. So you will be wrong and you will take losses. I take losses on my account, as I've shown you, all right? I use a stop loss as a worst case scenario. So I sometimes will just hit the close button and get out. Okay, that's my stop loss. My stop loss isn't a thing that triggers an MT4 to get me out. It's my button press. All right. So when I'm in 4 positions or more, and price has really moved the wrong way, I'll put into place a plan to get out. Okay. Important thing to read here is I will put into place a plan to get out. I won't necessarily get out. It's a trigger in my head that goes, yeah, you're quite wrong on this one. How are we going to dig out of this one? So my view is not how much loss am I going to take or how am I going to take this loss. It's how am I going to get out of this with a profit. There's always a way back out. Okay. What do you think a hedge fund is? Hedging is where you buy and you sell to average out and make a profit. That's why they call them hedge funds, right? There's always a way out of a trade that you can make a profit. When I'm wrong on a trade to such an extent it's getting uncomfortable to be in drawdown, I start to close out a position or two or parts of positions to minimize my rate of drawdown. So the rate of drawdown is deemed by how many positions are going against you in the wrong direction. Now you can slow that rate of drawdown down by closing some of those positions out. So if it does go further, it doesn't go as far into your balance, into your percentage drawdown. Okay, this is called Drawdown Control. We're going to look at this in detail in module 6, but in a nutshell, it's a method of using profits that you've banked every day to scale out of positions. So let's say, for example, today I have made £500 profit. All right, my account is in minus 750 drawdown. All right. What I can do is use some of this profit, £200 of it in this case, to make this less painful. All right. So I've come out the day still with a nice profit, but I've reduced my drawdown from 750 by closing some accounts, some positions out at a loss. So I've taken £200 worth of loss in my P&L. To reduce my drawdown to 550, so it's more comfortable. But I would only ever do that if I'm uncomfortable at 750. In my case, I wouldn't be. Absolutely fine at 750, that's no problem at all. So that's basically what drawdown control is. We're using the profits we've banked on a daily basis and offsetting them against the losses we're currently sitting with live on our P&Ls. Okay, but we're only going to do this if it hits our percentage figure that we are uncomfortable with in our account. Okay, our job is to bank profit on a daily basis and make our drawdown smaller. That's our job as traders. Okay, so you've probably heard the terminology before. What this is actually called is basket or grid trading. Okay, it's the big boys method basically. So I call it basket trading. Grid trading is similar, but grid trading tends to have set levels. So you will get in every 50 pips, 100 pips or something like that, and it's not practical. We know that the market moves between levels and it heads for targets and does stop hunts and things like that. So it's better to use what's called a basket, which is basically a collection of orders in a direction that you take at levels that make logical sense to get in at. Okay, we're going to see a lot more of how to get in at specific levels, especially in the live room. You're going to see me doing that every day. Okay, so this is how the hedge funds and the institutional traders enter and exit the market, and we're going to trade like them. Okay, we're going to get out of this retail game. We're going to start winning. All right. Do you think an institutional trader or a fund manager that is sitting there and every trade he takes is 100 lots in size? Okay, massive order. Do you think that he sets a 20 pip stop loss and a 40 pip TP on that trade? Of course he doesn't. Okay, if he takes a stop loss at 20 pips and a TP of 40, when he takes a stop, every time he takes a stop out, he's going to lose tens of thousands. Right? It's not going to happen. Right? So the question is, why are we as retail traders using stops and trading in this way? All right? Think about this. What did I tell you the banks and institutions need to power their moves? Stops and stop hunts. Right? We're taught as retail traders to use these so that they can take them. It's as simple as that. Now, I'm not saying there's massive conspiracy theory going here, okay, and all the brokers are owned by the banks and institutions, but we've been trained over the years in all sorts of ways to use stops to our advantage, and they end up being detrimental because the banks know what we're doing exactly, where we're putting these stops, where we're likely to put them based on where the market's turned, and they just come and get them every time. All right. So using stops, you are trying to pick the top or the bottom of some kind of move. Even in a trend, when you're getting a pullback, you're trying to pick the bottom or the top of that pullback. All right. Stop doing it. It's fine if you want to try and pick tops and bottoms. I try and pick tops and bottoms. It's just in our nature. We want to get the best possible entry. But if you're going to do that, don't use a stop. Okay? So that's the end of this module. Homework from today onwards. Okay, in the next module, we're going to look at planning our entries in a calculated way. So we're going to look at how to execute and plan getting into a basket trade and getting into a trade in a particular direction on a currency. Okay, so your homework is to go and play in the simulator. Right, go and get Sphere Test if you can. It's $49. Put it on a credit card. Something. Just go and get it. It's something that will change your life. You've got to practice this. And it's better to practice it in a simulator, then get onto a demo, and then go live. Or just go straight from simulator to live. If you nail it in the simulator and think, Christ, I didn't realise this, how easy it was, go to live, but use small lots, all right? So get in the simulator, go and practice. If you haven't got the simulator, just go into the strategy tester, stick an indicator on there and let the thing move forward in time, and maybe put marks on the chart where you would have taken trades and see what would have happened. Would you have been right or wrong? You won't know how much drawdown you went into, but at least just look at how the market's moving in the simulator and see what would happen when you get in and out. All right. From now on, go and get a demo account, get a new one from a broker, any broker. Put 10,000 in it if you can. Ideally, try and get a demo with the sort of amount that you're going to have as a trader, because that will help you get used to lot sizing. And take trades using a lot size of 0.05 only and scaling. Okay, we're going to look at more of how to scale in and what sizes to use and things in the next module. But get a 10k account to start off with and just use 0.05 lot sizes. That's the simplest thing to do. And try and trade this way. All right. So I'll see you in the next module where we're going to look at how to get in and out and plan these trades that we're going to execute. So I hope you enjoyed that, and yeah, see you soon.